Did you know some of Bitcoin's biggest crashes stopped right at seemingly random lines on the chart? Coincidence? I don't think so. Today, we're unveiling Fibonacci Retracements, a hidden pattern that could unlock the key to better crypto buys. Plus, I'll share a special bonus at the end of the video. My golden Fibonacci settings for pinpointing those perfect altcoin entries. So stick around. Okay, let's cut to the chase. What the heck are Fibonacci retracements? They might sound fancy, but the idea is simple. Think of them like footprints left behind by the price. After a big move, up or down, the price often pulls back, kind of retracing its steps. Fibonacci lines show us the most likely spots where the price might find a temporary floor before deciding where to go next. Now, let's get hands-on with this. We'll use TradingView. It's free and easy. First, find a chart showing a clear upward or downward price swing. See those tools on the left? Find the one with 3 lines. That's our Fibonacci retracement tool. To draw it, grab that tool, click the swing's low point, drag all the way up to the high point, and release. Boom. You'll see a bunch of lines pop up. Those are your Fibonacci levels, the possible zones where the price might react. Those lines aren't just for show, each one has significance. Let's break down the key ones. 0.382. This is often a temporary pullback zone during a bull run. 0.618. This one's a biggie, known as the golden ratio. Prices can find strong support or resistance around here. 0.786. In crypto, especially with altcoins, this level is super important. If you're looking for a deep discount before things turn around, this is a prime spot to watch. Okay, theory's great, but where's the profit? Let's look at some real-life examples with Bitcoin. Notice how during past bear markets, the price bounced right off those Fibonacci levels, especially that 0.786. Now, here's the key. These levels aren't just for Bitcoin. You can apply this to your favorite altcoins, especially during strong market trends. This tool helped you find those sweet buy zones, potentially giving you a massive edge over traders who are just blindly buying. If you dug this deep dive into Fibonacci retracements, be sure to smash that like button and subscribe for more crypto trading insights. Want to dive even deeper? Check out my free weekly newsletter, On-Chain Edge, where I uncover what those big funds are buying. Link in the description. Alright, time for the bonus. Remember those golden pocket zones I mentioned? These are my customized Fibonacci settings that work incredibly well for finding those deep discount entries in altcoins. Here's the deal. Golden Pocket 1. Between the 0.618 and 0.65 Fibonacci levels. Golden Pocket 2. Between 0.786 and 0.82. Now, here's the key. These levels aren't just for Bitcoin. You can apply this to your favorite altcoins, especially during strong market trends. Let's take a recent example like Ondo Finance. Recently, the price found support in my golden pocket zone before bouncing higher. These Fibonacci levels can help you identify potential buying areas, giving you a massive edge over traders who are just blindly buying.